The primary market continues to be in the spotlight. After Dodla Dairy and Kim's IPO last week, it's time for another initial public offering, and this time it's India Pesticides. And we're here to get you an insight into all the relevant information you need to decide whether you want to subscribe or not. Let's get you more details about the IPO. The subscription opens on 23rd of June, will be closed on the 25th. Price band is 292 to 296 per share. There'll be a fresh issue worth 100 crore rupees, OFS of 700 crores, taking the total size of the IPO to 800 crores. Financing working capital requirements and meeting general corporate purposes. Those are essential two things that the proceeds of this IPO will be used for. Let's get you more insight about the company. India Pesticides essentially is an R&D driven agrochemical manufacturer. It operates in two verticals, technicals and formulations. It's also the fastest growing agrochemical player in India in terms of volume of technicals manufactured. It is also the sole Indian manufacturer of several technicals, the likes of Folpet, thiocarbamate and herbicide. It manufactures 30 plus formulations of insecticides, fungicides and even herbicides. The technicals majorly are exported to 20 plus countries across Asia, Africa, Australia and Europe. Agrochemical formulations are primarily sold to domestic crop protection manufacturers. As far as operations go, it has two manufacturing facilities in Uttar Pradesh, in Lucknow and Hardoi. There's aggregate installed capacity for agrochemical technicals at 19,500 million ton and for formulations at 6,500 million ton. As we speak, it's also setting up two manufacturing units for herbicide technicals. Now talking about the listed peers, Dhanuka Agritech, Bharat Rasayan, Rallis India and PI Industries. These are essentially the listed companies that you can compare it with. As far as the financials are concerned, the company has consistently delivered both on top and bottom line growth over the last 3 fiscal years. From FY19 till 21, it has consistently shown good growth, which is in fact one of the key strengths of the company. Talking about some more strengths, there's significant emphasis on R&D. The company constantly seeks to develop new products and alternate product processes. There's strong long-term relations with various multinational companies in India and abroad. Clientele includes the likes of Syngenta, UPL, Conquest Crop Protection, Sharda Cropchem, etc. It's also among the fastest growing agrochemical company with more than 56% export revenue. They have a diversified range of products. There's a strong brand recognition as well, which provides further growth visibility. Valuations at an extreme discount compared to listed peers at 24.5x of PE. Like I said, consistent financial performance, strong sourcing capabilities, distribution network, and future growth plans is what makes it an attractive investment bet. But on the flip side, you also have some risks to watch out for. Working capital intensive business, that is a big risk that has been flagged off. It requires approvals and licenses for products manufactured and sold in India and also for exports. There's reduction in demand from technical and formulation in the agrochem space. The use and adoption of biopesticides by customers could also affect companies' competitive position. Change in climatic conditions, another factor to watch out for. There's forex risk as well. Dependence on few customers could also perhaps be a potential risk to watch out for. So there you have it. Hope all of this helps you weigh the pros and cons and address your question of whether to subscribe for this IPO or not.